Hi, and welcome to the weekly market update for Morton Brown Family Wealth. I'm Dennis Morton here with Cody Demmel. Cody, how are you doing?
Good, how are you?
Doing great. So we're here in the week of January 25th, and I'm going to give you a data point that by the time this airs in a couple of days might be off by a couple 100%. So the current price of GameStop is $323 a share. Cody, this is the story of the week. It's kind of a snapshot. One of these, we've talked about distortions for the better part of a year. This is one of the latest, craziest examples of a distortion in the market that's happening. Just to give you some perspective, at the beginning of this year, GameStop was trading at less than $20. So from 20 to 323 in 1 month's time. About a year ago, it was trading for less than $4. So, Cody, GameStop, AMC Theaters, what's happening at these stocks?
Yeah, so this is taking speculations to a whole different level. So what's happening in these stocks is, so hedge funds were shorted against the position. So they thought the stock was actually going to go down. Some traders on Reddit and some of the other forums, Twitter, saw that how large of a short position they had against these stocks. So they started piling in to try to make the hedge funds cover their short positions. Dennis, if you want to just do a brief description on what a short is.
Sure. So when you bet against a stock, say the stock is valued at $10. If you bet against it, your upside is that stock going from 10 down to 0. That's how you're going to win. You think it's worth less than 10. Whatever you make on the downside is actually money in your pocket because you borrowed shares and bet against it. The downside risk for anybody who sells short is that stock going up. And it can go up to infinity. There is no downside to how much it can go up. So you have armies of day traders combining resources to drive share prices higher, and that's called a squeeze, where suddenly somebody who's bet against has to raise capital to keep meeting their margin requirements. So they'll sell whatever they have to try and do this. So you've had a lot of strain placed on certain pockets of the market. So far, this is not systemic, but it is creating some really wild charts. I'm looking at my dashboard right now, and there are 5 stocks just sitting at the top here that are trading up over 100% today. Some of them up over 200% today. Those are the kinds of moves that were happening. So let's talk a little bit about this. There's really 3 phases to this. A couple of them are pretty rational. One is betting against the stock. It's been around for a long time. It's legal to do it. There's ways to do it. It's speculative. It's dangerous, but you can. It's also fair to push against that, to say, you know what, I believe there's a bull case for this stock. But now you have the piling on, and this is where the real mania comes in, and that's what we're seeing. We're in the piling on phase. There's a name for it. It's called the greater fool theory, where you're buying something with the expectation that you'll make money because some greater fool is going to come along and pay more for it than you did. There's no fundamental story here. I mean, GameStop is not. They've lost money, $100 million over the last 12 months. There's no profits, but the stock is going through the roof. So yeah. I think the bigger story here for us as investors is to say we're in that speculative phase where people are willing to chase after returns. There's kind of a psychology to it. There's scarcity and expectations. Cody, what do you think about like the trader mentality here?
Yeah, I mean, that's part of the thing. A lot of these day traders are kind of just at home now. They were still working at home, or majority are, so they're bored. They're stuck doing nothing, so they're trying to have some excitement. They're piling into some of these stocks, and I mean, the speculation, like you said, is just to a different level because the hedge funds are literally betting because they think the stock was already overpriced, so they thought it was going down, and now you have all these people, like you said, just piling on, which is just driving with all the volume buying, it's just driving the stock up. I mean, today it's up over 100%. It's up 7,000% since last year.
Yeah, and even our friend, our old stock we talked about almost a year ago, Eastman Kodak, that stock is up 40% today. It's lost over $200 million over the last year. This is this liquidity that's been pumped into the system and a certain amount of confidence based on where we are in the pandemic, where we are in the recession. Those things kind of pile in, and that's where you start to get frothy. That's where you start to get bubbles there. But one of the things I thought was interesting, first, we were tossing around a quote earlier today, just when people are too idle, that's when things start to go sideways. There's a great quote from Blaise Pascal, a classic quote, "All of humanity's problems stem from man's inability to sit quietly in a room alone." We just can't sit still. We've got to do something. And trading is an outlet. It's an outlet from returns. It's an outlet for activity, all those things. One other thing we talked about, okay, so there's historical precedent for this. And Cody and I were discussing some of the earlier, more speculative booms. If you want to read a great book, A Random Walk Down Wall Street, starts with a lot of market history and walks through things like the Dutch tulip mania, which, if you're not familiar with that story, the Netherlands had fought for and won their independence from Spain in the late 16th, early 17th century. Suddenly, the wealth of Europe started pouring through Amsterdam, and the standard of living started to raise, and exotic goods started flowing in from around the world, including rare tulip bulbs. Well, suddenly the rarity of these tulip bulbs started to catch on as currency, and people would trade them and buy them. Cody, you were sharing a story of people selling acres of land in exchange for one bulb, knowing that they were going to be going up in price and up in price and up in price. So it's one of the early stories of things just going maniacal and then collapsing and taking many people's finances down with them. But the other thing about tulip mania that I thought was interesting was how close it was to an economic event. Like, it was the end of a war. It was at the establishment of a new kind of economic regime. And kind of like where we are now, there's just so much churn to things. And suddenly people might be sitting on newfound wealth, depending on how they did in the market last year. Where does that go to seek return? So there's some history to that. So, Cody, why does this matter? How do we think about this as investors? How does a financial planner think about observing a mania in progress?
This one with the GameStop and the short squeezes is interesting for multiple reasons. I think it could be good that, it brings potentially new investors into the market, kind of what we spoke about back in April and March when everyone was stuck at home. They didn't really have anything to do. But then things as financial planners that we have to think about. You have politicians now, you have the White House press briefing talking about this. So you never know if they're going to come out with some different laws or just things that we have to look out for that could potentially affect the financial market.
Yeah. I think so much of this is also fueled socially. Like, there are people who are saying, hey, I'm buying this because I saw on Facebook or I heard from my friend that they're doing this, and there's a piling in that happens there. That's where we would encourage people who have a more thoughtful investment process to step back and say, can I be an observer of this? Do I need to participate? The analogy that we would give is, imagine you're sitting at a football game in a snowstorm. There's a game happening on the field. There's lots at stake for the players on the field, much less so for you. There's miserable conditions for everybody. You're all soaking wet and freezing, but the winning and losing doesn't matter for you because you're not playing the game. And I think we have to step back and say, like, let this play out. Where we're watching for the systemic concerns, like, does this create a major issue with liquidity at a larger fund? That's happened before historically. Doesn't appear to be now. But I also think when people get burned by this particular trade, the downside is, does it scare them away from thoughtful investing for a while? We've talked before about the .com bubble when it burst. It kind of coached a generation of people that I'm not going to touch stocks, I've been burned, and they went and ran into real estate and they got burned there. So we just want to make sure that it's okay to be passive here. It's okay to be an observer, as strange a time as it is. It's not a call to action necessarily, right?
Yep.
So sometimes we collect things like tulip bulbs because they're nice, we like tulips. Sometimes we trade them because we want to get wealthy. You have an interesting collection, do you not?
Yeah, so I have a huge saltwater fish tank. So I guess you can say I collect both saltwater fish and corals. I like the corals a lot more than the fish, but that is probably my biggest hobby and a lot of fun.
Is there a speculative nature to that? Like, do people buy and sell coral and fish?
Yep. So I buy and sell coral with other hobbyists and everything, and it's fun. But there's always like a new coral that's insanely priced, and then you never know what's going to happen with it down the line. So yeah, there's definitely speculation in that too.
Fascinating stuff. I love hearing about people's collections and what they do. I don't have any collections of my own. I tell my wife she's married to a guitar player who does not have a gear habit yet, so I haven't started my collection, but it's coming. So Great. Well, this is speculation episode 2 in a row. We're hoping to get back to something a little bit more normal, maybe like taxes and planning next week. But if you have any questions about other things that are happening in the market, other distortions, we always want to hear what's on your mind. So let us know. In the meantime, we hope you and your family are well, and we'll talk to you again soon.